What's going on, penny boys and gals? It's your boy, What the Duck here, and it's time for another bonus trading class video. So in this one, as you can see, we'll be going over the TSI and the STDV. We have a bunch of other bonus videos going over other indicators, which you can definitely check out on our free Discord. The link is right there. It's pennyboys.is/tradinguniversity. And you can check out all of our other indicator videos, as well as our trading psychology videos and all the other free trading class videos in our Discord. You'll get access to the actual videos as well as the handouts. So without further ado, let's go ahead and get right into our trading class video on TSI and STDV. So what is TSI? Well, TSI stands for True Strength Index. The TSI is a technical momentum oscillator, and you can see it right there. It's the top indicator on the screen. Right above the STDV is the TSI with the blue and orange lines. So it's a technical momentum oscillator. It can show you trend direction, strength, and possible reversals. It has a TSI line, which is the blue line. That's on the Webull default settings. It will be blue. And a signal line, which is orange on the Webull default settings. If the TSI line crosses above the signal line, it can show a buy signal. If the signal line crosses above the TSI line, that can show a sell signal. So for those of you who have taken Penny Boys University and are familiar with the MACD, it works very, very similar to that, whereas the TSI line would be like the MACD line and the signal line is like the signal line. So once again, that TSI line is above the signal line. So that blue line is above the orange line. That's showing a possible buy, possible uptrend. And if the signal line, which is the orange line, is above the blue TSI line, that's showing a sell signal or a possible downtrend. There's also a base line. This is the center line, and that is going to be the zero line. So wherever that zero is, that is going to be the baseline. If the signal and TSI lines are under the baseline, so if they are negative, that means the bears are in control. So in this current example, the TSI is negative 4.863. The signal is negative 5.022. This is showing that the bears are in control. And of course, if the signal line and TSI lines are both above the baseline, so they're positive, that means the bulls are in control. So if the TSI and the signal were like 3 and 7 or 4 and 2 or anything that's not negative, that could show the bulls are in control. Kind of like with the MACD. With the STDV, this is the standard deviation indicator. STDV is used to measure volatility. It measures the difference between the closing price and the average price. High volatility causes stocks' prices to fluctuate, which means they move hard and fast. Low volatility tends to mean that there is steady price movement. The default settings for the STDV, or the standard deviation indicator, in Webull is 20. As you can see, right next to the STDV letters, you see in parentheses the number 20. That is my setting, and in Webull, that's the default setting. This means that it is based off of, and it being the STDV, this means that that is based off of the 20-period moving average. And the period is based off of what chart time frame you're looking at. So if I'm on the daily chart, I'm looking at the 20-day. It's based off the 20-day moving average. I'm looking at the minute chart, it'll be based off the 20-minute moving average. Hour chart would be based off the 20-hour moving average. Standard deviation is based on the reversion to the mean principle. Once again, that's the reversion to the mean principle, or the retracement to the average principle, which is a principle that says that all deviations from the mean should be followed by return to the mean. So the distribution of prices all balance itself out, which basically means that with every give, there has to be take, and with every take, there has to be give. So it's basically saying, stocks go up, but they usually come down, and whatever that mean is, or the average, is usually where the stock likes to fluctuate in between. So usually if it goes up above the average, it usually likes to come back down, and if it goes down below the average, it usually likes to come back up. So when you buy a stock, someone else is selling it to you. If you sell a stock, someone else is buying it. So when there is low volatility, there's usually followed by high volatility, hence the give and take. The price spikes are usually followed by pullback, which would be the take. The RSI is also based on this theory, that when there is give, there has to be take. That's why stocks go back and forth from being overbought and oversold. And we go over the RSI in one of our bonus videos in the future, but we also go over the RSI in Penny Boys University during our 1 month charting classes. Go over a bunch of stuff in those charting classes: MACD, VWAP, RSI, like I was saying, Fibonacci, and moving averages, and a bunch of different support and resistance indicators in detail. So definitely be sure to check that out. That's the Penny Boys University. And you can also go to our Penny Boys Discord and find the free trading classes as well, which are 100% free. Got a bunch of bonus classes in there, just like this one. So, using the theory of the give and take, or the reversion to the means, or the retracement to the average, we can assume when a stock is showing low volatility, this means that there might be a breakout or a price spike coming soon. And when there is high volatility, one can assume that there will be a decrease in trading activity coming soon. Because once again, usually there's give, then there's take. So if it's showing low volatility, you can maybe assume there's going to be high volatility. That could either mean it's going to go up or down. That's why you use other indicators alongside the STDV, like the TSI, to see what the trend strength is, and see that way you can kind of determine if you think it's going to go up or down. The standard deviation indicator can have different numbers for different stocks. So a higher standard deviation number is not what determines the level of volatility compared to another stock. The stock's price is factored in when determining the value of the standard deviation. So a stock with a high standard deviation number doesn't necessarily mean it's more volatile. You have to base it off of its past trading patterns and how the indicator reacted to the price movement in the past. So for example, the STDV of this current example is 0.005. For a penny stock, that could mean low volatility, or it could mean high volatility. Whereas, like, for example, like Apple might have an STDV of like 4. That doesn't mean that it's high, because the STDV in the past could have been like 7, 8, 9. So the number doesn't matter. This one's 0.005. That doesn't mean anything. It just means that you want to look compared to the past. In the past, you can see 0.01 is high volatility, whereas 0.005 is low volatility. Whereas for, let's just say, Apple, high volatility might be like an 8 or a 9, and low volatility could be like 2 or 3. So just because Apple has a STDV of 2 or 3, it doesn't mean it's showing high volatility. In this case, if this one had a volatility of 2 or 3, that's super high volatility. But for different stocks, the numbers are different because it's based off of the price. So you can't just say like anything that has an STDV over 2 is high, or STDV over 1 is high. No, it's based off of that one stock and the stock's trading patterns. There are also some other signals or signs that can help you with the standard deviation indicator. You have the maturing bull market. So this is when the stock is near its trading high, but there is decreasing volatility. So you can use the standard deviation indicator to see that in this case there is decreasing volatility. And if this stock is near its trading high, that's showing a maturing bull market. This is used with longer time frames, like the daily, weekly, and this can help show a possible bullish movement coming. Once again, stock is near its trading high with decreasing volatility and show a possible bullish movement coming. There's the hesitating trader signal. This is when the stock is near its trading high and there is an increase in volatility. This means that the traders are hesitant with the stock. Once again, the stock is near its trading high, but there is an increase in volatility. That is hesitation. And there's a lack of traders' interest signal. So this is when the stock is trading at a low and there is decreasing volatility. This just shows that traders are not interested in the stock currently. So STDV is low compared to its past STDV, and the stock is trading at a low. The price is lower than it usually is, then that means that traders are not interested in the stock. And then you have the panic sell-off signal. This happens when the stock is trading at a low and there is increasing volatility. This can show a market sell-off. So you have the high volatility, the STDV is increasing, but the stock is trading at a low. Well, that means that volatility is selling. So it can show panic selling. During really red days in the market due to news, You can look to see if your stocks are experiencing panic sell-offs and take advantage of the price dips or sell before it becomes a bag, depending on how confident you are in the stock and your plan. And a bag being a stock that you let go beneath your stop loss and you end up holding it for a while for a loss because you don't have your risk to reward management in place, you don't have your plan in place, or you broke your plan, which we try to stay away from in Penny Boys University. We try to show you different tips and tricks you can use to make sure that you are trading based off your plan so that you do not become a bag holder, so that our goal is that you make more profit than you do losses. Your wins outweigh your losses, and that way you can be profitable in the long run using a trading plan. So let's go ahead and go to our Discord. You can see, if you go to the Penny Boys Discord, you can go to the free trading class area right above the schedule and events, which you can also go to see all of our different live streams and what courses we're doing currently in Penny Boys University. But here in free trading classes, we have a whole bunch of free classes for you. And if you click the link, it'll take you to the handouts. You also get access to the class videos. And this will give you a handout which kind of goes over everything that we just went over. So this is our Tsi Stdv Handout, which you can have access to if you are in our free, 100% free Discord. And you'll get access to the video that we just went over, and also to all the handout, which goes over everything that we just went over in the video, so that you can look back on it, retain it. So you have to memorize everything. You have it right there in front of you. We go over the different kind of signals. So you want to have that. Definitely, you can either just copy and paste it, or just have this saved so you can just keep going back to it. The whole point is for y'all to learn, be able to retain all this information. We go over the TSI in this handout. We go over the STDV as well. And every single Penny Boys University class comes just like this. So it comes with a video. It usually comes with homework, but because this is a bonus class, there is no homework. In Penny Boys University, if you get 100% on the homework, you get access to our cash giveaways. We do $75 cash giveaways every single week, every single Tuesday during our live streams, our PBU live streams at 2:30 p.m. Eastern Time Zone. And we also do $25 cash giveaways randomly throughout the week. You can join our Discord, and then you can go to our cash or contest area, go to the bonus cash giveaway area to see all the ways to get into the bonus cash giveaways, which are the $25 ones throughout the week. Then you can go to the weekly cash giveaways, which is our $75 one, which we do every Tuesday. And you can see how to enter in those different channels. Definitely check out the free trading classes, especially, actually all of them are really helpful if it's currently a red market. Like I was saying, that the panic sell-off signal that we can find using the standard deviation indicator. Well, if that's happening, then maybe you want to check out the trading during a red market class. So that is the end of our TSI and STDV indicator video. Once again, TSI will show you trend direction and reversal, and that is a true strength index. And the STDV is the standard deviation indicator, and that is used to measure volatility. Definitely worth checking out. You can also check us out at facebook.com/group/btpenny, or the Discord listed right below. It's a free trading Discord. We also have the premium area with the premium alerts. And if you are a premium member, you gain access for free, if you are premium, to our 22 class Penny Boys University trading program, where we go over trading psychology, trading strategies, trading tools, as well as indicators, so you can make your own Penny Boys University trading plan and learn how to track your trades using that plan and learn how to make some bread. So I hope that helped. I hope that you guys will join us in our free Discord. Check out some of those free classes. You can say hi. You can message me, What the Duck. If you have any questions on that Discord. If you already are in the Discord, you're already part of Penny Boys University. I hope to see you in the next PBU live stream. I hope to see you in our classes. But until then, I hope that you all make some bread.